Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, October 21st. Firstly, looking at the performance of the various indices relative to each other, and here we have the Russell 2000 up 1.63%. The Dow 30 was the underperformer of all of these indices. It was up 1.31%. The S&P 500 was up 1.96%, whilst the Nasdaq 100 was the leader, being up 2.62%. Firstly to the S&P 500, and here we see a continuation of the trend to the upside today. The market's actually gapped up at the open, highlighting a rush of enthusiasm by the buyers here. The buyers have been in control of this market for the entire day, opening up at the low and closing up very close to the high, suggesting that the buyers have been very, very strongly committed to taking this market higher. Very solid upside net momentum in terms of the distance between the open and the close, and an increase on the net momentum from the previous day's trading. And it does suggest that the buyers certainly are the dominant party here in this short-term time frame. We've also had a very important bullish close up above the Kijun-sen indicator, and this suggests a strong change of sentiment in this market. And it suggests that there is a good likelihood of the market trading to higher levels. Now, whether we do it for the next day's trading is debatable, because this is something of an extreme day, and we've had 4 white body candles on the way up. So it wouldn't surprise to see the market perhaps come off for the next day, but only slightly. And we'll be looking to support at 1925, down through to the Kijun-sen at 1919, down through to the bottom of this yellow zone of previous support and resistance around 1916, 1917. If the market does come off, I think that will probably be the extent of that move. Down below there we've had this window that was opened up, and the window may provide very solid resistance to this market, roughly between 1909 and 1905. I think I said resistance, I'm sorry, I meant support if the market does trade to the downside. Now, if the buyers do go on with the move, and there's a good likelihood that they will, with the market being very strongly bullish, then we could find some strong resistance around this 1955 level, and coinciding roughly with the area of the bottom of the cloud. And that will be a good test for this market, how strong the buyers are if we do test around there. If we're strong enough to close, or to see the buyers close within the Ichimoku cloud, it certainly will signify that we could eventually see the market break out through the top of the cloud. But we do now have a bullish market in the medium and fast term timeframes, but still not supported by the Chica span. And the Chica span here being below the corresponding price action suggests that we could see the market test to this level and see the sellers come back in. In terms of the bands, and here we see continued price activity within the bands, and very close to the middle band, suggesting that we have a fairly neutral market in terms of this 20-day time period trend. Previously we were strongly trending down outside of the bottom band, highlighting the very strong negative bias. We then saw the bullish close within the bands, and that suggested that that strong negative bias had ended, and we've now seen some very strong follow through. Quite often we see resistance around the middle band, and that hasn't happened here, and the market has taken that out in a bullish manner. It does suggest that there is some potential for the market to trade to higher levels. Now, if we do continue trending up, the extent of that may be to around the top band, which is trading at 97.59 at the moment. Moving next to the Dow 30, and here we see a very similar type of candle opening up at the lows, closing up towards the highs, gapping up at the open, creating a window, something of a small window however, so not as large as the window with the S&P. It may provide support if the market does trade down to there, but certainly not as strong support as we may see with the S&P 500. With the market closing up towards the highs and upping up at the lows, it does suggest the buyers have been in control all day. Very strong bullish bias in this market in the short-term time frame, with the market now closing up above the Tenkan-sen and also just closing above the Kijun-sen. So something of a strong change of sentiment in 2 time frames, and it does say something about the strength of the buyers in this market at the moment. Similar to the S&P, if the market does continue to rally from here, potentially strong resistance around the 16,735 level, and we have the bottom of the Ichimoku cloud trading around there, and it may provide very strong resistance around that level. In terms of the bands, and here now we see the market closing within the bands, suggesting that that very strong negative bias has finished that we saw prior to this price action. It does suggest that there is potential for the market to follow through. We'll be watching the middle band at 16,709 to hold a strong resistance for this market if it does trade up to that level. Next to the Nasdaq 100 in a similar type of candle, a very large white body candle, gapping up in a major way. The market actually gapped through the Tenkan-sen and the Kijun-sen, and it's very unusual for a market to do that. It really does suggest that the buyers are strongly dominant in this market for the Nasdaq 100. Very large gap will provide very strong support if the market does retrace back to there. Importantly, however, we're seeing the market interact at the moment with the Ichimoku cloud, and that was the extent of the range for the day, with the market closing just around that level. So a good test tomorrow will be how the market reacts here. If the buyers are strong enough, they may trade to within the cloud. 4,000 round number may provide strong resistance. If they can trade through there, then we may see strong resistance at the top of the Ichimoku cloud around the 4029 level. If we do come off, as I mentioned, support at 39.23, and within this window from 39.08 roughly down to about 38.71 level. But we do have a bullish market now in the medium and fast term timeframes, not supported by the Chica span at the moment, but certainly it is here for the buyers for the taking. A lot will depend, as I've mentioned, how the market reacts tomorrow. If we see strong selling come in and trade through the window, we could then see the market test back down to these levels, but I doubt that the sellers will be strong enough to close down through that window tomorrow. We could see them probe through there, but what may be important would be a close down through there. Next to our bands with the Nasdaq 100, and here we see from the previous day's trading we closed within the bands and suggested that that very strong negative bias in the market had finished. We've seen the gap up and the market close in a bullish manner up above the middle of the bands, and it does suggest that this market is quite strong, and it does suggest that there is a good chance for the market to rally to the upper band around the 4048 level, but we expect to find initially some resistance around that area. Next to the Russell 2000, and with this market once again a gap, as we've seen with all of the indices. This is a fairly decent gap. It suggests that there's been a very strong rush of enthusiasm. It does suggest that we're likely to see the market trade to higher levels with this bullish close. The buyers in control strongly committed, trading through the 1106 level of resistance. Importantly, trading through the Kijun-sen indicator in a bullish manner does suggest good possibility of the market trading to higher levels. So we have a bullish market in the fast and medium term timeframes, and the market trading to the 1123 level of previous support and resistance certainly wouldn't surprise. If we come off the area below 1099 with the window that extends down to the previous high, roughly about 1089, should provide very strong support. And with the bands, a very different scenario here than we've seen with the other indices, and the market has traded all the way through the band to the upper level. And here was the indication previously with this bullish close, the bullish follow through. It suggested that that strong negative bias was over, and it actually led the markets, the other markets, this smaller cap index led the other markets through to this bullish transition. Well, not quite yet, however. We don't have a strong bullish transition yet, but through to this from this very strong downtrending price action. We have seen the market close around that upper band, which is at 1112, and if we do see a bullish breakout up above there, it will suggest that we have a strong bullish bias in the Russell 2000, and what we'd like to see then is follow through in a bullish manner to confirm that breakout and suggest that the market has transitioned from this very strong downtrending phase to this strong uptrending phase. Moving next to our sectors, and here on the left hand side looking at the Ichimoku chart, we see a bullish breakout up above the Ichimoku cloud for the healthcare sector. It suggests that we now have a bullish market in all three timeframes, not supported by the Chica span yet, but if we do see some strong follow through, we could see that change and see confirmation of it. The important thing here is that this sector has been outperforming the S&P 500 generally for some time, and strongly outperforming by moving up above that upper band for periods of that time, but certainly well up above the middle of the band. One thing to watch here is that we may have seen a cyclical peak in volatility, and we could see volatility come off after this breakout, so we do need to be careful, and that would be in line with some very strong price action just above where this sector is trading. In terms of the bands on the right hand side here, and here we've seen we can see that strong volatility with the bands wide apart. The gap up for this candle, strong bullish candle, trading within the bands now. That strong negativity is finished, and a good possibility of a test up to this 2144 level, which will coincide with this zone of resistance. Another fairly strong sector here on the daily charts has been the real estate sector. And in terms of Ichimoku, we were very strongly trading down under the cloud, but we've had a fairly decent recovery going on since early October. Previously we had the breakout down below the cloud, the retracement to find resistance at the cloud, the strong trading below each of the Ichimoku indicators, and then the strong bullish breakout above the Tenkan-sen, and moving into this transition phase, finding support at the Tenkan-sen, bouncing off there to trade through the Ichimoku cloud today with a strong bullish breakout. Luckily for the buyers, the interaction here with the cloud has been through a very thin part of the cloud, so it didn't take a lot of buying power to trade through there. But the important thing is that we do have a bullish market in all three time frames here. Just watching the outperformance, strongly outperforming through this period when the market was rallying, but now coming back to within that upper band, so we might not see the same strong outperformance that we saw previously. But one thing in the favour of a continuation of this trend to the upside is that we've seen a cyclical low, and we're now seeing volatility continue to pick up. Here on the bands we saw the squeeze, and that was around that cyclical low. We saw the market trading in a strong bearish manner down below the bands. The transition phase with the test within the bands, the bottom band holding as support, trading up to the upper band, holding as resistance, finding support at the middle band, and then the bullish breakout and the confirmation now with this strong bullish activity up above. It does suggest that there is a strong bullish bias in the real estate sector at the moment. If the sector does come off, looking to strong support down around the upper band, roughly about 596. Next, looking at some stocks, and first we'll look at Facebook. The code is FB, and on the left hand side, the Ichimoku chart, we saw the bullish breakout up above the Ichimoku cloud. The market initially trading within the cloud, finding support at the bottom of the cloud, rallying through both the Kijun-sen and the Tenkan-sen. The Tenkan-sen holding a support on the breakout candle, and then for the candle that confirmed the breakout, this bullish follow through saw support within the top of the Ichimoku cloud, and now the strong follow through once again with the buyers in control. At the moment we are seeing some strong outperformance, trading up off a cyclical low in terms of volatility. In terms of the bands here, and we saw the something of a squeeze go on, the bearish breakout below, the market trading through the clouds, just testing above the upper band and on a bullish breakout. So what we want to see here is confirmation with another bullish move, and that will confirm that there is a good likelihood of the market going on with this new trend. Facing some stiff resistance up around this 79.67 level of this previous swing high. Next, taking a look at Google, and Google has been a very solid underperformer for this market over the last couple of weeks, trading below each of the Ichimoku indicators in a fairly bearish manner. The rally here that we saw today was not terribly strong, a change of trend to the upside on a fairly small white body candle. It's a hanging man type pattern, does suggest potential for a change of trend, and that's because of the small body, which represents that momentum to the upside has not been as strong in net terms as it was for the previous day's trading. If the market does continue to rally, I suggest we'll probably find some very strong resistance around the Tenkan-sen at 539.59. In terms of volatility, moving up very strongly off a cyclical low, and it wouldn't surprise to see a cyclical high in volatility and for the market to either congest here or to continue to retrace this first and second time frame downtrend that the market's been in. But we do have these points of resistance on the way up with the Tenkan-sen as mentioned, and then also at the Kijun-sen at 552. In terms of the bands, and here we saw something of a squeeze going on, the false breakouts up here, and this transition here into the downtrend, trending very strongly still to the downside, trading down below the lower bands, and it does suggest in relative terms that this is a fairly weak market, and we can see that with the relative strength comparative to the S&P 500. If Google does rally, we may find some strong resistance at the bottom band at 532.46. Next to Home Depot, HD is the code, and here we see bullish activity on the left-hand chart in terms of Ichimoku, trading above both the Kijun-sen, the Tenkan-sen, and also the Ichimoku cloud, and good solid support for that bullish activity with the Chica span above the price action. We do have a cyclical low in volatility. An opportunity here for the buyers are strong enough to trade this market significantly higher. A lot depends on how we react around this swing high about the 94.74 level, 95. Have been outperforming the market quite strongly for some time, and it does suggest good potential to see some strong follow through this level. Interestingly, looking at the bands here, we saw something of a squeeze going on here. When we saw the breakout down below the lower band, we didn't see the strong bearish follow-through that I like to see. We first saw, even though the trend was down, we saw the buyers coming in into the market here, with the buyers closing with control, and we saw an indecisive candle that did eventually lead to this bullish engulfing pattern and the change of trend to the upside, with the market trading through the bands with a bullish breakout to the upside, giving us a strong bullish bias to the upside. But what we want to see is confirmation of that with a strong bullish candle, and also we'd like to see the market trade up through this swing high around 94.77. Next, looking at Unitedhealth Group, UNH is the code, and here we've seen a strong bullish breakout up above some strong resistance around the 88.80 area. This bullish candle suggests the buyers are strongly in control, strongly committed, trading well up above the Ichimoku cloud and each of the indicators, supported by the Chica span, and highlighting this very strong uptrending price action in the market, strongly outperforming the overall market, the S&P 500 for a couple of weeks, and we have the volatility here trending up off a cyclical low and trending up in a very strong manner. In terms of the bands, a strong breakout and now confirmation of that bullish breakout, and suggesting that we have a very strong bullish bias in this market, and suggesting that there is a good opportunity for the market to trade to higher levels.